Do you know your Social Security number?
Yes,
Do you know your blood pressure?
sort of.
Do you know your FICO score?
Yes,
Do you know your Social Security number?
Yes, I do.
Okay. Do you know your blood pressure?
Oh, yeah.
Oh. Do you know your FICO score? Do you know the Social Security number?
Yes.
Do you know your blood pressure?
Yes, I do.
Do you know your FICO score?
Yes, I do.
Do you know your Social Security number?
Yes, I do.
Okay. Do you know your blood pressure?
Yes, I do.
Do you know your FICO score?
No, I don't.
Do you know your FICO score? I know mine. Where did FICO come from? What is it? What's it mean? Well, years and years ago, late 40s, early 50s, the banks, savings and loans, credit unions were just starting to get involved in doing some really aggressive lending. They wanted to make mortgages. They wanted to make car loans. They wanted to offer you a charge card. They wanted to make boat loans. You wanted appliances for your house. You wanted to fix up this or fix up that. You needed money. And so they had these banks and banks of cubicles of people that were ordering credit reports, trying to figure out whether you were a good borrower or a poor borrower. Good borrower simply means you'll make your debt, you'll pay it back on time. A poor borrower means that you'll miss the payments or not pay them back at all, or you'll skip out on the loan altogether. For a lender, for a bank, savings and loan, credit union, who does not know you, that does not have a personal relationship with you, they were looking for some way to figure out, without having hundreds of people in the basement looking at credit reports, trying to second guess whether or not to lend them money. And there was a period of time when banks wanted to just send out thousands and thousands of credit cards, and all they wanted to do was get as many credit cards out as possible because they figured out how much money they could make off of each credit card. And if they could make 2 cents or $2, they felt if they did it 1,000 times, that would be 2 cents or $2 1,000 times for profit. Or if they had 100,000 or 1,000,000. And yes, some of the national banks were that aggressive. And so they wanted some way to quickly determine whether or not to send you a credit card in the mail because they didn't know you at all. So in 1956, two guys got together at Stanford Research Institute in Menlo, California. They were going to school there. Two guys. Their names were William Fair and Earl Isaac. Fair, Isaac. Sound familiar? Okay. So what they did, they were aware that what creditors were trying to do, one was an engineer, and one was, what was he? He was an engineer, and I got to look at it here, a mathematician. That's what it was. So one was a mathematician, one was an engineer, and they decided they could come up with an algorithm that would determine whether you were going to be predicted to make your payments on time and pay off the loan, or they could predict that you wouldn't pay on time or wouldn't pay off the loan, and they came up with a scoring system. For mortgages, that scoring system runs between 300 and 850. And the word FICO is very simple. What was the name of the two guys in Menlo, California that put $400 into the company each? Bill Fair, and Earl Isaac, Fair, Isaac, CO stood for company. Fair, Isaac, Company. So they worked on the program for 2 years, and they pitched 2 years later 50 lenders on the idea of providing them with a scoring system where they could simply determine whether or not they were going to lend you money or not. And that's how, in 1956, FICO came to be. So we'll move on to the next section here, but FICO is Fair, Bill Fair, and Earl Isaac Company. Simple when you know how, isn't it?
All right, let's look at what can affect you as it relates to the FICO score and the things that you can run into that can cause you a problem. I've listed them right here. These are the major things. Now, there are obviously other things too that could cause you problems, but let's go down the list here. It can affect you, your FICO score that is, whether it's high or low, can affect you on whether or not you can get a credit card. Then your home mortgage loan, and if you can get a home mortgage loan, it can also affect the interest rate that you may be charged on that home interest. In other words, a home loan could be the preferential rate, and the home loan could be the not so preferential rate, causing you to pay a higher interest rate if you can get a home loan. If your FICO score isn't in line, it could affect you for an auto loan. And that auto loan can also be a high interest rate or a low interest rate, depending on your FICO score. And, you see the guys on TV all the time talking about, I can get anybody approved. They can get you approved. One person's paying 1, 2, 3, 4% interest, and you could be paying 18, 19, 20, 21% interest for your car loan if your FICO score isn't up to snuff. It can affect you for a business loan, a credit card, or a line of credit. Don't forget job prospects or income prospects or opportunities that may come along, and they pull a credit report on you and find out you are not such a reliable individual as far as paying your bills. Health insurance. There are a lot of insurance companies that pull credit reports to find out, are they going to get their premium from you on a regular, consistent, monthly basis? You can bet on that. And let's see. Let's assume that you want to rent a house, rent an apartment, and they happen to pull a credit report on you, and you find out that they do not want to rent to you because your credit score isn't up to snuff. Thank you very much. And now you're going to be looking at a less attractive area to rent a house. And that's not so hot, is it? Okay, then the last thing that's probably the most degrading would be that the utility company, the phone or electric, doesn't trust you for their monthly payment, and they require you a down payment for you to get started in an apartment or a rented house. And that is what a FICO score is all about. That's why they have them, and that's what you need to be aware. Okay, here we go. The gentleman on the screen is William Fair. He's Mr. Fair of Mr. Isaac and Mr. Fair, who started FICO. This next picture, as I'm going to blow this up just a little bit and let you see the two gentlemen that started FICO, Bill Fair and Earl Isaac. With an investment of $400 a piece, they came up with a algorithm, never mind. They came up with a system. If you haven't guessed, it's late at night, and I'm doing this at night, okay? So bear with me. They came up with an algorithm that says they know how to predict whether you're going to pay your bills on time or not. And they started it in 1956, as we said earlier, and they approached 50 lenders and said, we can help you determine who's going to pay you and who isn't. And you're saying to yourself, oh, baloney, I don't get it. There's no way they know this stuff. You wait a minute. We got some things here that's going to knock your hat in the creek. Yeah. All right, next one up here would be the way that your FICO score is weighed. What goes into a FICO score? Over here on the 3 o'clock side of the clock, 35% of the weight of the FICO score goes into your payment history. The way you have handled credit in the past is the way you will handle credit in the future. And then they also look at the amount you owe in the form of credit. Are you constantly having large sums of credit, can never get them paid off, or do you have just a standard or normal amount of credit that, for example, I would consider myself, I use a charge card almost for everything. I have the bank go ahead and pay it off each month. My bill comes in, I don't know, $300, $400, $500 a month, except for Christmas, which comes in earlier. The bill is paid automatically. So the amount of money that you owe, so are you on a student loan? Do you have a $500 car payment? Is your rent $1,000? Do you have 3 or 4 charge cards that you're paying your minimum on? The amount that you are owing is weighed by 30%. And then the length of your credit history. Have you had that charge card for 10 years, or you had that charge card 3 months? New credit. In a mortgage, here's the Achilles heel. A month ago, you went and borrowed $10,000. And now, a month later, you come to me, a mortgage lender, and you want to borrow $100,000, $200,000 for your house. What did you borrow the $10,000 for? Is that your down payment because you don't have any money and you're not putting any money into the purchase of this house? A la new credit, weighed in at 10%. And then the types of credits that you use. Are you using charge cards? Are you got a student loan? Have you got a truck payment, a car payment, a van payment? Do you have, who knows, all kind of credit? Only 10%. It'd have to be really out of whack for it to make any kind of major decision. So that's your wheel. That's what makes up your credit score. And I'm going to show you another chart, which I thought was a little more colorful. I'll blow it up here and let you look at it. It says basically the same thing. Payment history, the amount owed, the length of your credit history, new credit, and the types of credit in use. Well, let's talk about who you are and what you are. And let me blow this up just a little bit. Okay. Your FICO score, how lenders rate you. And look at the red, yellow, light green, a little more green, and green, green, green. So it looks like that if you have a credit score below 580, no, let's see, 580, above 580, oh, I see. From 300 to 580, you're a red light. And from 580 to 669, you know, there are, as they say, there is a lid for every pot. And there is an interest rate for every one of you out there that don't think you need to pay your bills on time. And you will be paying a higher interest rate most of your life if you're not going to pay your bills on time. It's just that simple. I'm not preaching to you. You know what I'm saying is true. I'm just simply telling you your FICO score is what's going to determine what interest rate. If you do get an interest rate, if you do get that loan, if you do get that charge card, that interest rate is going to be higher than what my interest rate is going to be with a yellow FICO credit score. All right, moving into the light green, seen as a good credit score by most lenders. You probably have stumbled here and there. We can understand that. We've done it ourselves. We think we will be able to lend you some money, maybe a little higher rate than just the very best interest rate, but we'll lend you money. And then in the 740 to 799, quite frankly, that is a falling off the log. We're going to lend you the money, but I'm looking for anything that may appear out of line, but I don't think I'm going to find it. I'm not really looking for it. If it pops out at me, I'll be surprised. And then, of course, the plus 800, the total green, means that you have handled credit and they consider you an exceptional borrower. And I know a couple of people like that, so they lavish in their FICO score. Who of you out there, what your credit score is at the bottom, and then you can say to yourself, who's in my group with me? How many or what percentage of the population who applies for credit, who gets credit, has the same credit score that I have? And here you are. Here's a table for you to let you know where you stand with the rest of the country. So there it is. So 27%, which is the highest, and 13%, you add those two together, that's 40%. 40% of the country is considered to be good to exceptional. The rest of the 60% is where we got to decide whether we're going to lend you money and at what interest rate. Now you say to yourself, well, come on, this doesn't mean anything. There's nothing to this. They're just making all this up. It's a scam. I've heard it all. As I've heard people tell me, it's a racket. It's a scam. It's a way to get higher interest rates. There is no justification for it. There's no reason you should do it. This next chart should open your eyes. This chart is a delinquency rates chart. And it says that if you have a really low credit score, 300 to 499, you're going to default on that money that you borrowed 87% of the time. I have never seen this chart before. I was kind of surprised at this chart myself. But it looks like to me that if you are in the 700 or above, you are in a very exclusive group. You're in what, 5, 2, and 1? That's 7, 8% of the people in America. If you can get in the 700 plus area, you're 8% of the people in America who have fantastic credit or who have fantastic history about the way in which you handle your credit. There it is. There is nothing more that can be said. That pretty much tells you why they have FICO scores. Once your score has been determined, you fall into some kind of bracket in some kind of chart, and a lender looks at you and decides, number one, yes, I'm going to lend you money. Number two, no, I'm not going to lend you money. If I'm going to lend you money, at what interest rate do I lend that money to you? Do I lend it to you at our premium rate, or do I fear that you may default and I can justify charging you a rate over and above the normal? That's how they make their money. You don't pay your bills on time if you're in these long bars on this chart. Okay, that's it. Let's move on, and let's say that that's the FICO score. That's about all I want to tell you about. That's it for this session of Follow the Money. You want to buy a house? FICO score. This is it. So thank you very much. We'll be talking about income, and I don't know if we're going to talk income next or if we're going to talk about, do you know the difference between a mortgage, a note, and a deed? I'm kind of thinking I might go that route. But then we might talk about income next. Okay, I'm Steve Duncan. Thanks for watching. We'll see you the next time. 1, do you know your Social Security number?
Yeah.
Do you know your blood pressure?
Yeah.
Do you know your FICO score?
Yep.
Do you know your Social Security number?
Yes, I do.
Do you know your blood pressure?
Yes.
Do you know your FICO score?
No.
You know what a FICO score is?
So that your credit score?
Do you know your Social Security number?
Yeah.
Do you know your blood pressure?
Yeah.
Do you know your FICO score?
Is that anything like your PSA?